What's up, everybody? It's your boy Mpumi and Code Funds and Galore. When investing needs more, man, we're gonna be doing a preparation run for FOMC, right? So, guys, let me know if y'all are technical traders, fundamental traders, or you trading both, which is sentimental trader, right? So let us know. I'm a pure technical trader, but I use news, right, to allow me to know whether if we literally are having volatility or not, right? So that's how I use news as a pure technical trader. Otherwise, I don't use numbers, I don't use stats to identify whether I'm going in or not, right? So I use my pure technical analysis skills to determine whether I'm buying or I'm selling, right? So welcome to the channel, man. It's your boy Boomy and Co. So let's dive into the market. So literally we're gonna be analyzing GBP USD, Nasdaq 100, Euro USD, and S&P 500. So let me know if you want me to analyze anything more, and also let me know whether you're a technical, fundamental, or sentimental trader, whether you're a swing trader, whether you're a day trader, so let me know whether you're a scalp trader, because scalp trading, because I know a lot of scalp traders, right? So normally news events like this, that's when they're most active and looking for those capitalization moves, right? So let me know whether you're technical, fundamental, or a sentimental scalp trader, swing trader, day trader. Let me know, guys. So we're gonna be diving into the markets, right? So first off, we're gonna continue from the GBP USD, right? So GBP USD, let's look at GBP USD quickly before we go. So my favorite indices, which I also trade on my real account, is Nasdaq and S&P 500, which I'll be covering soon. So I'm also doing a more diverse channel whereby I'm covering also currencies, right? So as you can see, we had a break. So like I said, guys, there's two options to this trade, right? We have two options to this trade. It's either we need to also set traps for buying opportunities and selling opportunities, right? So this is where we estimated if the market does break below, give us those retests, we'll go for sales at this level, at the break upon this level. Or like I also stated, like, guys, look at the market right now. It was giving us impulse correction, right? The market gave us impulse correction. We had a very strong impulse correction, and after a correction, we might expect a very strong impulse towards the upside, even though we have a daily resistance at the key level. We need to also look at the market structure, which is the most important thing. You need to look at the market to be able to make calculated decisions whether you're buying or selling. You don't want to just be guessing, right? So like I said, we're gonna wait for the retest. So the market broke, retested also on the trend line, also broke into our entry barrier. So let's dive deep and see if I would have entered right now. Where would have entered, right? Because I don't typically, because like I said, I trade what is my favorite. What is my favorite? Nasdaq and S&P 500. So I would have, because this is 30-minute time frame, let's see where I would have entered and whether or not this is where I would have entered. And like I always say, we always risk 0.45, right? Here's our 0.45. So basically, let me delete the new long position that I placed. Let's use this one. So basically, if I was also into trading currencies, this is the entry I would have placed, right? And I would have risked 0.45. So we almost hit stop loss here. I would have risked 0.45 or until 50, but 0.45 it is, right? So at a point like this, we need to establish our mid-level zone where the market is likely to reverse or switch up on our trade, right? This is the most likely position. So like, let me give you two instances. As you see, we would have entered this trade, we would have been in profit now. Let's lock this. So basically the market broke, gave us a retest on our daily key, our daily trend, right? Our daily, let's go switch to the daily trend quickly. Let's remove this out the way. Let's zoom in. Place, delete. So as you can see, we had our daily trend, which is highlighted in red. We had the support, market bought until the resistance, sold, bought until the resistance. Now the market is breaking beyond the resistance, right? So as you can see, we add a daily resistance and a daily key level resistance. So what can happen from this point onwards, guys? You always need to be aware. Even though we would have been in profit with this particular trade, what you need to be wary of is that prices can reverse, right? So you want to know where is it likely for prices to reverse. So this is a nice area the market is playing at. As you can see, we're having prices respect this resistance area, which we highlighted within a zone, right? So basically what this means is that the market can respect this and push back down. So when we look at an overall perspective, right, let's go to 4 hours, we can see that the market is creating a reversal pattern, which is an M. So we had a market push up, push back down, then it pushed back up, then it can literally fall, right? And like I always say, we want to place our entries below the M, where the M creates its last high, right, which is here, literally here. So we would wait for the market to break, give us retest as in the market breaks and the market retests, then it continues. So basically that's how we trade. Because why? What is the overall point of trading, guys? Literally, what is the overall point? The overall point is that we make money trading. That's literally the overall point. We want to make money while we trade, right? So in order for you to make money while you trade, what you need to do is you need to understand your strategy in and out, understand how it works, when it can backfire, all of those things, because they're important in terms of making your calculated trades in the future or in the short-term period, because you need to understand the basics of your strategy. That's how you grow as a trader, and that's how you will reach your goals, which is to be able to make money out of forex. Forex is not an easy road. It's not 6 months or 2 months. You need to take your time. You need to make your mistakes so that you understand how the game is played and how you can incorporate your own strategy with what the market is telling you at the present day, right? We're having FOMC. Like I told you, I'm a pure technical trader, so I use news to allow me to know when I can expect very volatile market movements, right? We love volatility, but not extreme volatility. So when news events hit, that's when extreme volatility takes place, right? We don't want to be a part of that. What we want to do is that after that volatility plays out, that's when we look for entries, given that we're not in a trade already, right? So we're going to complete, let's look at, so basically that's it. So now that's the potential reversal pattern for our buy trades, which we're in profit for. But also I need you to understand that this is trading. You need to make a decision. So it's possible for the market to reverse, and you understand how or what factors will drive the market to reverse, right? So what we want to do right now is we want to also anticipate whether when the market whether the market, if like let's say the market pushes towards the upside, right? What do we do from this point onwards? So literally, as you can see, we have our TP right there. So right now what we want to see is, as you can see, the market is respecting this resistance, therefore the market came to this resistance and it's falling short, right? It's respecting that resistance. So what can happen is that the market can also continue to break, give us those retests, and continue going upwards. So once the market continues going upwards, we will have our stop loss below this new support, which right now is a resistance because market is not breaking above it. So once it breaks above, comes back to retest, it will be a support. And what do we do on the support? We look for buying opportunities, right? But in our instance, we took in our buying opportunities early, so we will use this level as a stop loss and profit, right? Stop loss and profit, whereby our trade will be a risk-free trade. It's either we'll go out with a small win or a very big win, right? So let's go to my favorite indices, man. I love Nasdaq and S&P 500, which are the two indices that I'm trading on a real account. So Nasdaq, like I said, we have two options, right? We can capitalize on the market when it breaks, retests, and continues, or when the market drops back to this previous support, which it failed to retest because it broke very impulsively. So you have two options of entering the market. So now let's look at the notes that I've said. So price overbought equals a mid trade. So meaning that if the market breaks, retests, if I was to decide to enter, would be a mid trade. Why? Because the law of impulse correction states that once the market moves impulsively, it has to correct, then it can create another impulse move towards the upside. But in this case, we had an impulse, but instead of the market correcting towards the downside, it's correcting towards the upside. And like I always say, this price movement can indicate that prices are overbought. That's why I've written it on our text right here. This is why I price overbought, right? So we're expecting prices to drop back down because of the market structure and it approaching our resistance area, right? This is our resistance zone area. So like I said, if the market decides to push up and break this trend, then we're not gonna enter, because why? It's not correcting. We don't want to enter in mid level trades. We want to only enter in high probability setups. That's where the money is. High probability setups. You need to know your strategy so you know when to enter and when not to enter, right? And also the key factor to knowing when not to enter is you taking losses back to back and being able to study from those losses so that you can accomplish your goals of being a profitable trader, right? So Nasdaq, if it drops back down, we'll be most interested. If it breaks above, we're not, because prices are correcting towards the upside. So let's just zoom out and show you the overall setup for Nasdaq, right? We can also create a trend, right? So it's possible for this trend to play out. Like I said, always be one step ahead of the market at all times. So we have a trend right here. Then we'll clone it. because why? Our trends always need to be two identical twins. So as you can see, let's use a line chart quickly to just block out the noise, right? Okay, that's more like it. And delete, let's delete this, man. Let's delete this and create a twin. Literally create a twin. There we go. So we can also expect the market to respect this new trend. Where is my trend? Let's delete this. Okay, wrong. So let's just quickly remove this trend, right? And duplicate it. Let's duplicate it. So if we were to abide by the rules of a trend, right, we have a support, the market respected, at a resistance, market respected, and we had our support on top of a support zone, double confirmation. So now the market is correcting towards the upside, so we can see pushes towards the downside. Then only the market can regenerate energy to push, or regenerate liquidity to push towards the upside, right? So we don't want to rush, we want to see what the market is going to do. So right now, let's switch back to currencies. We covered GBP USD. Cool, we covered that. Euro USD, right? So like I told you guys, it's possible for the market to continue with an impulse correction, and an impulse. In this situation, the market is not correcting towards the upside, it's correcting towards the downside, right? Meaning that the market can still push towards the upside, right? So we'll just have to switch to a 4-hour time frame. So we'll switch towards our 4-hour time frame and zoom it out so you can see, right? So like I said, our lower time frames, you're gonna use a green trend. If you see red, just know that it's whether it's a key level like this or a trend, it represents the daily trend, like the daily key level or time frame, right? So right now we are diving deep in towards the market so we can find out our trends without a lot of noise, using bigger time frames, right? So like I said, what we do on the bottom, we do on the top, and what we do on the top, we literally do on the bottom. So right, we can see the market broke, retested, so the market can complete this trend, but we want to look for entries where after the market has broken past this area right here, which we can also deem another resistance area, right? So once the market breaks above that area, gives us those retests, then it breaks also above this trend right here, right, the 4-hour trend. Let's zoom out. This trend right here, also if it breaks out of this trend, gives us those retests, we have a multitude of signals detailing that at this point in time we could be looking for buying opportunities to the upside. So that's what we would do in this particular trade, right? So let me know whether you're technical, fundamental, or a sentimental trader, guys? You literally let me know in the comment section. So literally, also you can also catch this stream later on, man. You can catch this stream, given that you were busy, could not catch it on before FOMC, right? So if you're a fundamental trader, let us know how you plan on trading these news events using fundamental. Like I said, I'm a pure technical trader. I don't use fundamentals, I use pure technical analysis, right? And I know how to navigate these extreme volatile movements, whereby we're having NFP, CPI, and etc., right? FOMC and all of those news events that can carry a lot of volatility in a short period of time, right? So yeah, man. So we are done with Nasdaq. Let's move to S&P 500, man. Let's just dive straight into S&P 500. Let's look at S&P 500, man. So S&P 500 finally finished off this move, right? So let's look at the nodes. Delete. So let's look at the nodes. So untradable because of new highs, right? So yes. So once we look deep into S&P 500, we hit the support. We're expecting the move to complete this whole trend, but expecting it to complete the whole trend and finding entries are two different ideas, right? Are literally two different ideas, because for us to have entries, we need an exit strategy. If we don't have an exit strategy, because if it does break above, we are literally taking new highs, right? So we wouldn't be able to enter unless the market drops back down. So we'll have to see how it breaks and how far it goes, literally. So right now we can see that the market has failed to break this resistance area. It has never broken it before and continued. So this could be the first time, or the market might drop first and give us those entries at a much fair price, at a much cheaper price than taking entries here, right? And also equating in us taking less risk, but with a high probability setup, right? So literally these are the areas that I personally would enter. Am I condoning you to enter? No, I'm not. All I'm saying is that this is where I find my high probability setups, and I'm also explaining to you guys why I'm looking at these specific areas for entries, because I need to explain why I'm looking for entries at this particular area, so that it makes sense from a technical analysis point of view, right? So that's basically it, man. That's basically it. If it continues, we're gonna wait it out. It'll just be like gold, whereby we're expecting pushes towards the downside. So if we might live trade tomorrow or even before FOMC, but I'm looking to watch the news for FOMC. That's what I want to do. I want to watch the news for FOMC at 8. Literally just watch what's happening. So basically I'm gonna set up my alerts so that once the market reaches the areas where I find, okay, these are the areas where I'm looking to place my entries, right? That's where I will be active in the markets. For now, I am done. All I'm gonna do is just watch the news later, live, when Fed Powell deliberates or tells us or gives us information about the economy, the future, what we can expect in the future economy, and what people or traders or people who are investing take of that information. And so we will see later on what happens. But that's basically where I'm looking for entries from a technical point of view. I don't rush entries, I don't trade every day, so that's basically how we're approaching everything, right? So let me know whether you're a technical, fundamental trader, sentimental trader, whether you a swing trader, day trader. Let me know in the comment section, man. Like I said, pure technical. If you're pure technical like me, let me also know. Let me know, man. And yeah, let's build and let's grow. Until next time, peace out.